What's going on, guys? KEVINCAGE here with another crypto update. I hope everybody's doing well, and let's dive right into today's video. We're going to go through all things Ripple and XRP, the Ripple US dollar, and stablecoins. Alright, so first up, we had this week, the stablecoin supply on Ethereum reached $168 billion, marking a new all-time high. And looking at the total stablecoin market cap today at $289 billion, with the total crypto market cap around 3.9 to maybe even $4 trillion. So the stablecoin market dominance, or its market share, is about 7%. And considering that Treasury Secretary Scott Bessent believes that for the US dollar stablecoin market cap alone, it could exceed $2 trillion by the end of 2028. So not even discussing other fiat currencies focused on stablecoins that are tied specifically to the US dollar. Because when we think about it like that, going to $2 trillion and starting at where we're at today, that's approximately $1.7 trillion in new liquidity that could pour into alts. So looking on DeFi Llama at the stablecoin market cap, we are at an all-time high and we are in price discovery. If you want altcoins to rip higher, you better be rooting for stablecoins. Think of stablecoins like the dry powder of crypto, so when their market cap grows, it means that billions of fresh dollars are just sitting on chain ready to rotate into higher risk assets like alts. And keep in mind that stablecoins are the base currency of trading, so crypto pairs against USDT and USTC, so more supply means deeper liquidity pools and tighter spreads. Now let's talk about why it's almost always USD-backed stablecoins or US dollar-backed, because the US dollar is still the world's reserve currency, so global trade, commodities, debt markets, they're all denominated in the US dollar. And by using USD stablecoins, crypto basically plugs directly into that existing demand. We already know the benefits of tokenization like asset fractionalization, financial inclusion and accessibility, and quick or almost instant settlements. And stablecoins basically allow and make all of this easier to basically be the bridge between banks and blockchain, merging the world of the crypto asset class and DeFi with traditional finance. And this shift is happening right now. Money is leaving the banking system and moving onto crypto rails, so instead of wires or SWIFT, you have 24/7 instant settlements in Tether or USDC. And these dollars are backed one-to-one, so once these dollars are on chain, they don't just sit idle, they're flowing into DeFi, RWAs, and ultimately altcoins. And for almost every single chain out there, every single transaction of a stablecoin requires gas, whether it is a very small fraction of XRP or Ethereum. So the takeaway from all of this is super simple. If stablecoin market cap climbs from a few $100 billion to trillions, that is trillions of fresh liquidity that can and will flood into alts. So that's pretty much the end of my big rant related to stablecoins, but just keep in mind when you see stablecoin charts climbing and more supply has been increased and we're seeing mints left and right, that is not noise. That's the foundation being laid in real time to bring trillions of dollars on chain. Alright, next up, before we dive into an important XRP community FUD check for the Ripple US dollar, along with taking a look at what Bitcoin's price would be at different percentages of gold's $25 trillion market cap, let's run through a couple quick things for iTrustCapital. So we know right now the market is watching Jerome Powell's rate decision, and we're going to see if we get this rate cut now or later. And in the meantime, we did get 3 new assets listed on iTrustCapital to join the existing 80+ options available. And those include Hyperliquid or Hype, now available. We also had Crow or Kronos, along with World Liberty Financial. And I've had my Roth IRA in the crypto space with iTrustCapital since 2020. They're an absolute must-have. And I have iTrustCapital linked right in the top of the YouTube video description. You can also find them in the top link of my link tree. When you sign up, make sure that you do use the promo code KEVINCAGE8. That way you get a $100 funding reward. And what's really nice about iTrust is you have complete flexibility. Do you want a Roth IRA for tax-free gains in the crypto space, or do you want a premium custody account, a closed-loop system basically unhackable? And the best thing is you can have both. So be sure to go check them out, and if you do, make sure that you use the promo code KEVINCAGE8 so that you get your funding bonus. Alright, let's dive into this XRP community FUD check. So a common question is, why is most, or if not the majority, of the Ripple US dollar supply on Ethereum instead of the XRP ledger? And what I mean by that is this. So here's the Ripple US dollar. You can go to CoinGecko or CoinMarketCap, and we have its market cap, its fully diluted valuation, we have the circulating supply, and the total supply. So 729 million. Now when we check XRP scan, essentially the block explorer for the XRP ledger, we can see the actual supply on the XRPL, 85.9 million Ripple US dollar. So for example's sake, this 85.9 million Ripple US dollar is basically 86 million, or approximately 12% of the entire Ripple USD supply. Now when we go to Etherscan, we can see on Ethereum, this has the bulk of it, the Ripple US dollar on Ethereum, 644 million. So the answer is simple. Just like many projects do, they see ETH as the king of DeFi, of the user base, of custody infrastructure and liquidity. Essentially, this is distribution. So the whole plan would basically be a Ripple bootstrapping on Ethereum, just like many projects do, and then liquidity flowing home to the XRPL. Now, when you compare the XRP ledger versus Ethereum for RWA adoption, it's really interesting. You can see the pros and cons pretty clearly. We know that the XRP ledger is still lacking a lot of TVL and liquidity. But when you compare the chains, the XRP ledger is low cost, basically instant settlements. They're doing a lot of work in terms of reducing onboarding and friction overall. There's so much compliance and issuance tools. Whereas other projects might be really pushing the boundaries, the XRP ledger is focused on stability. 10+ year track record, never been hacked. That is the type of chain for institutional adoption. Now, like I said, Ethereum's great. I hold Ethereum. It has a huge user base, but there are some things that don't make it absolutely perfect. It's an older project, which also gives it some credibility in the space, but there are new projects that are completely improving upon and building much better tech stacks. Nobody wants to use Ethereum if there's going to be some type of withdrawal or lock staking delays for liquidity. People want their money now. They don't want network congestion and variable or even high gas fees. And with smart contracts for RWAs, they're getting way more complex than what we're used to. Like, think about deploying smart contracts which need KYC, redemption rights, legal wrappers. Now, Ethereum can absolutely do that, but it's expensive. That's going to add a lot of overhead. So hopefully you can kind of imagine the pros and cons for every single chain. I don't believe there's just one single right solution. It's going to be based on the customer and the application. All right, next up. So looking at gold's market cap today on 8 Infinite market cap, we can see the market cap is $25 trillion. So just for example's sake, considering Bitcoin's market cap today and just keeping the circulating supply the same, we can look at what Bitcoin's price would be if it had 10%, 20%, all the way up to 50% of gold's market cap. And if you want to check out the full newsletter, this is linked right in the top of the video description. Alright, we got a couple more things and we'll call it a day. So looking at total value locked in DeFi, we are getting close to our previous all-time high that we hit back in 2021. I really just want to see Ethereum finally make that move, doing major moves into new highs. I want to see us enter price discovery and not only have another alt season, but another exciting cycle in DeFi. So we can see that total RWAs, or real-world assets on-chain on all crypto networks, hit a new all-time high over $30 billion. And as we scroll down, we can see Ethereum had a decent 12% increase on the 30-day. So which tokenized asset was responsible for really pushing Ethereum up? So when we look at all assets, we can sort by, let's do not total value, we'll check the 7-day. And now we can see the highest percentages ROI increase, but now we're going to look under total value for the highest amount. So scrolling through this, the biggest one right there is $500 million. So this is essentially this Chinese AMC US dollar digital money market fund. We can see that we had a big bump just on the price chart, $500 million, and really over the past week. So I just wanted to share that before we call it a day. This was this money market fund that injected $500 million on Ethereum. And last but not least, we're going to find out tomorrow if the Fed does cut rates or doesn't cut rates. And we can see the Federal Reserve may cut rates for the first time since 2024, so we're going to find out tomorrow. And based on history, especially last cycle, rate cuts are seen as bullish. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.